President Xi said that despite the international storms, China will realize what he described as its central task to make China great again. In his 2-hour speech at the opening ceremony for the Congress on Sunday, he said that the country's national rejuvenation would be underpinned by a Chinese-style modernization for at least the next 5 years. That modernization would continue to prioritize national security, and by that, President Xi means self-reliance, tech supremacy, and military power that is, quote, normalized. President Xi also suggested that growth is going to take a back seat, with the main principles being common prosperity, so that is narrowing the wealth gap with what he described as a standardizing mechanism of wealth accumulation, high-quality development, which many investors are taking to mean green investment is going to go up, and a continuation of zero COVID. He fiercely defended that policy, saying that it protects people's lives and also the economy. Of course, that's despite a lot of evidence and anecdotes to the contrary. Now, HSBC, as well as other research firms, have said that they believe that policy support is going to be underway for a lot of these tech firms, as well as for global STEM talent. This is despite concerns within the tech industry here about President Biden's export controls potentially undercutting the chip ambitions of China. The investors, though, here in the stock markets also embrace that line of thinking, especially buying up education stocks that have a lot of work in vocational training, as well as chip stocks. Now, one other development that was quite interesting is that amid all of the celebrations for the Congress, the Q3 GDP data, as well as the September economic data, was pulled unexpectedly from the government schedule. They were set for Tuesday. This also comes after, David, trade data was delayed on Friday. No word on why, but expectation is that no one wants to embarrass President Xi.
Eunice, thank you. Yeah, we are going to await that GDP data, obviously, a bit later than is typical. Eunice Yoon for us in Beijing. Let's turn now to Eamon Javers. He's looking at a rare warning from U.S. intelligence about the threat that an even more aggressive Beijing represents for American business. Eamon.
David, that's right. With that news out of Beijing over the weekend, leading intelligence officials and business analysts are really focused on the threat now of the possibility of a Chinese invasion of Taiwan, given what Xi Jinping said about that island over the weekend and what it means for the U.S. economy. I spoke to Michael Orlando, who's the top counterintelligence official in the U.S. Office of the Director of National Intelligence. He gave us a rare warning from the U.S. intelligence community directly to corporate America.
I think the one industry that causes me concern and others is semiconductors, given how much is produced there and how hard it is to reshore that, the amount of money it takes and the time it takes. And so that's why I think it's important we start thinking about those contingency plans now, because it would be tough for both economies.
And so I asked him if companies should start canceling their contracts in Taiwan.
Contracts in Taiwan, but working with our allies to figure out where else we can go in case we lose that capacity. Again, it goes back to basic risk management, which is you have to diversify. And if you have too many eggs in one basket, that's probably not good.
But cybersecurity and geopolitical expert Dmitry Alperovich told me he sees a much more dramatic and immediate impact here.
If there's a war over Taiwan, that means the end of all business in China. So American CEOs need to start planning for that possibility. I think it's not a certainty, but the likelihood is very high. So those that are making 10-year plans to be in China may be in for a rude awakening.
Bottom line here, the message from intelligence experts is the time for American companies to be thinking through their China divestment strategies is right now, because there's at least a possibility here of an event that would be a shock to the economic system.